Bankers in Asia have a nickname for their own industry. They call it the slaughterhouse. Most people are surprised to learn that Asia has the most brutal banking culture on the planet with longer hours than New York and London. But the recruiting timeline is actually more forgiving than the US. It starts later, it's less of a sprint, and there's also a backdoor into a full-time offer that doesn't even exist in the US. That's the biggest unfair advantage in Asia recruiting. So on one hand, you've got the hardest job to survive, and on the other, the path to break in is a lot more reasonable. And as polarizing as that sounds, that's why Asia's investment banking recruiting process is one of the most misunderstood, and it's why so many students who try to break in there do it completely wrong. So today, I'm breaking down how investment banking in Asia actually works based on my experience helping students break into the top banks in the region and from speaking with my friends who worked in banking for years. And so with that, let's dive in.
Working long hours is a way of life in Japan.
Now, it's long been believed that Koreans work some of the longest hours in the world, and well, that is true. But workers in Hong Kong and Singapore actually logged more time at the office.
First, start with culture because it's what surprises people most, and once you understand it, everything else starts to make sense. The simplest yet most significant explanation as to why banking culture differs so much in Asia is because of how demanding clients are. In the US, your hours tend to be brutal because of deal volume. You're cranking on a board presentation at 2 a.m. for a live deal, and there's a lot of work due to the speed of deal execution. In Asia, the reason you're working more is because clients are less sophisticated than the giant institutional clients you'd serve in New York. And so this means junior bankers have to do a ton of educating and play a client-facing role alongside all the deal work that they have to do. So for example, in addition to building a financial model, bankers and analysts have to actually be ready to walk a client through it. Now, this is great for professional development because you learn how to work with clients, but this is also what stretches analyst hours because on top of building the model and deck, you need to prep and spend hours with clients helping them feel comfortable with the analysis. All this said, the intensity of course varies widely depending on the client and country. So for example, dealing with a Chinese state-owned enterprise can be ruthless because they hold basically all the bargaining power and they know it. Korean and Japanese clients tend to be extremely hierarchical and demanding. Southeast Asia is generally a bit more relaxed with more growth equity and venture style deals. Another key reason for Asia's intense culture is the importance of face time. Given how hierarchical Asian countries are, you're basically not allowed to leave the office until everyone above you leaves as a sign of respect. There's also an intense drinking culture tied to client dinners and team outings that aren't optional. You might finish a 14-hour day and go straight into drinks with clients or senior bankers, and leaving early can also come off as disrespectful. So you do the dinner, drink, sleep a few hours, and head to the office the next morning, hungover, ready to work another 14 hours. Hong Kong, Japan, and Korea are notorious for having this type of culture, and things can get intensely political with lots of gossip and jockeying, which can get toxic, while other offices like Singapore and Taipei are a little bit more low-key in general. Weirdly enough though, all of this is kind of why people choose to start their careers in Asia as well. You grow faster than almost anywhere else in the world. Speaking from my own experience, I barely interacted with clients as an analyst at JP Morgan, but in Asia, you're expected to constantly work with and interface with clients. And so, as it turns out, the slaughterhouse is also the fastest way to actually learn how to be a banker. Next up, let's map out the offices since they're all so different. And for each city, there are just two important things to know: the language and the client base. First up is Hong Kong, which is the financial capital of Asia. Hong Kong is the largest, most competitive, most New York-like office in the region. And over the last decade, it's been almost entirely about one thing: mainland China. Since around 2012, the deal flow, clients, and hiring in Hong Kong have shifted overwhelmingly toward China, which means your Mandarin doesn't just need to be good, it needs to be near perfect. Hong Kong is huge on IPOs and capital raising, and recently claimed the #1 global IPO spot in 2025 for the first time since 2019, overtaking the US with $37 billion raised across 100 listings. This has been mainly powered by A+H listings, which are mainland companies already listed in Shanghai that add a listing in Hong Kong. So clearly Hong Kong's bet on China has been paying off, at least for now. This also means a lot of your work will be ECM and capital raising execution. So if you want the biggest equity deals and the most prestige in Asia, Hong Kong is the place to be. Next is Singapore, which is the second most popular office and is on the come up as the hub of Southeast Asia. A lot of people in the industry expect more and more deal flow to migrate to Singapore in the coming years, powered by a boom in private wealth. Singapore's family office count crossed 2,000 for the first time in 2025, driven driven by tax incentives, policies that allow funds to launch in just mere weeks, and capital looking to diversify away from Hong Kong and China, which has a history of spontaneously enforcing rules that cripple industries. Singapore is also the gateway to the faster growing economies in Southeast Asia, with a lot of deals from Indonesia, Vietnam, and the Philippines running through Singapore. The important implication from all this is that banking in Singapore skews towards M&A, sponsor coverage, REITs, and wealth-adjacent advisory rather than the ECM grind in Hong Kong. It's also the only major office where you can get by primarily on English, but being able to speak a Southeast Asian language is still a real plus. And then there's Tokyo, which is heavily domestic and runs on Japanese. Fittingly Japanese, the culture is deliberate and process-driven, decisions take time, due diligence is exhaustive, and you need real cultural fluency and the ability to speak Japanese to be an effective banker. That said, M&A in Japan has been booming, hitting a record $386 billion in 2025, accounting for more than half of Asia's deal count. This has been powered by Japan's reforms since 2023 that has been pushing companies to improve their capital efficiency, triggering a wave of companies to shed non-core assets, and causing a lot of private equity firms to hunt targets. On top of all this, a cheap yen has made Japanese assets attractive to foreign buyers, so while the process in Japan may be slow, the skew towards M&A, take-privates, carve-outs, and activist defense advisory makes banking culture anything but sleepy in Japan. Last up is Seoul, which like Tokyo is heavily domestic and runs on Korean, but is uniquely driven by the country's giant family-controlled conglomerates, which are known as chaebols. Firms like Samsung, Hyundai, SK, and LG pretty much own everything in Korea, and as a Korean American who's spent a few years in Korea, I mean literally everything. As a result, a huge share of deal flow ties back to them in some way, whether it's restructuring their sprawling corporate structures, cross-border M&A as they expand abroad, or financing for their semiconductor, battery, and consumer businesses. Culturally, Korea is also one of the most hierarchical and demanding with long hours, rigid seniority, and a heavy after-work drinking culture called hwaesik, which is something my friends would complain to me about all the time. Working hours in Korea in general are so crazy that when I helped one candidate from Korea break into banking in the US during an MBA program, she wasn't even worried about the hours at all because in Korea, she had been working 80 to 90 hour weeks regularly, and at least in banking, she would be paid a lot for it. Now, as much as language plays a role in Asia, sometimes it matters more about your ethnic background. You can be a Harvard or Wharton grad that speaks fluent Mandarin from being raised in China, but because you're Korean or white, you won't get staffed on Chinese deals. In a relationship-driven business like banking, Chinese call this kind of discernment guanxi, which means that sometimes who you are matters as much as what you can do. And that's about as far from the US-coded anyone can make it on merit mentality as it gets. And so that's a real insight into how this region really works. And now that you have a better understanding of the culture and the map, you next need to learn about the recruiting timelines. Generally speaking, Asia runs about 5 to 6 months behind the US. So in the US, junior summer internship applications open as early as October of your sophomore year, and the process wraps up by around February at most banks. Asia is nowhere near that aggressive, but what's important to know is that later does not mean relax. The process is heavily rolling and varies bank to bank, which means applying early is still a massive advantage. And let's break it down by where you are in school. If you're a freshman or sophomore, there's no early internship pipeline like in the US, so the pressure's lower, but the groundwork is identical. Build your finance experience, maintain a high GPA, and importantly, build your language skills. If you know that you want Hong Kong and speak a little bit of Mandarin, you should make sure that you're fluent and start practicing. If you're a rising junior, this is when the push really starts. Summer internship applications open up generally in the summer around July or August, going into your junior year. At most banks, you're going to be assigned higher views that kick off around August to September. And then second round interviews, usually with VPs or associates, come in October to November. And then the final super day can be as early as December, sometimes January or February. Lastly, if you're a senior going directly into full-time recruiting, that happens right around the end of your summer before senior year and in the fall. This is after banks know their headcount after handing out their offers to their summer interns. But if you're watching this past that time period, maybe midway through senior year already, the good news is that Asia has way more year-round off-cycle hiring than the US, so there are way more second chances that open up if you stay diligent. So those are the timelines, but remember earlier in the video when I mentioned a backdoor, one of the more unique paths to break into banking in Asia through something called an industrial placement or Singapore IP. These are 6-month off-cycle internships run by bulge brackets and elite boutiques that run from January to July that can lead to internships and full-time offers. A lot of business students in Asia graduate in 5 years since they take a semester out to do these placements, and this also means that if you don't, you're competing against candidates who already have 6-month off-cycle internships with solid logos on their resume. So unless your pedigree is elite, you're not really on a level playing field, and the play is simple. Do the IP first, stack the experience and get the brand, then trade up into a summer analyst seat at a Goldman, JPM, or Morgan Stanley. Now, if you're watching this thinking that you want to recruit for Asia banking, but you're feeling anxious or it's just a lot to navigate on your own, that's exactly why I built the Banking Accelerator. We match you with a coach who's actually broken into the office you're targeting, whether that's Hong Kong, New York, London, in order to help you get your story, technicals, and interview prep where it needs to be so that you can land offers. You'll also join a community of over 200 like-minded students using the absolute best resources for banking recruiting, and that's part of why we've got a perfect 5-star Trustpilot rating. We've helped students land offers across the world at every top bank, so if you're serious about breaking into banking, book a free strategy call with my team using the link in the description below. All right, now going back into the video, so you're working crazy hours in Asia, drinking late into the night, and waking up to do it all over again and again. So let's talk about how much you actually get paid to do all this. Since there are so many offices, we're only going to focus on Hong Kong, and let me know in the comments if you want a separate comp video for every office. First-year analysts in Hong Kong earn a base of roughly 900,000 to 1 million Hong Kong dollars, which is about 115 to 125,000. Depending on your personal performance and also the firm's performance that year, bonuses tend to be about 25 to 50% of base, which adds an additional 30 to 65k, leading to a range of 145 to 190k, but bonuses can be even higher if the bank crushes it that year. So all in all, comp is pretty comparable to the US, but there are a couple of important nuances. First of which is that there's basically no elite boutique premium. In the US, banks like Centerview and Evercore pay above the bulge brackets, but in Asia, bulge brackets and regional banks are the most prestigious and powerful, so they pay the most since they get the most deal flow. The other piece is tax. So while the bonus percentages in Asia tend to be a bit lower than the US, the tax rate is dramatically lower too. Hong Kong sits around just 15 to 17%, while Singapore is around 20%, which is a lot lower than the 35 to 40% effective tax rate that you'll pay in New York. So your take-home pay is actually higher in Hong Kong. The banks, of course, are doing the math and doing this on purpose. They know that they can pay you a smaller bonus in Asia, and your take-home pay still comes out even or even ahead of the New York analysts. Now, last up are the top 3 mistakes students make in Asia banking recruiting, and I got these from polling the students I've helped successfully land banking offers in the Banking Accelerator. Mistake number 1 is skipping networking because you heard it doesn't matter. Now, it's true that networking in Asia is genuinely less important than it is in the US, but that doesn't mean that it's pointless. Networking still helps and it never ever hurts. Even if you don't have the strongest resume or hire view, bankers who know you can put in a word with the recruiting teams, and that can be what pulls you into the next round. Mistake number 2 is not having real language fluency or not practicing your interview in that language. The trap that students fall into is that they think that being able to speak in casual conversations is enough. Instead, you need professional, business-level fluency given how much client-facing work is expected in Asia. The only exception is Singapore, where English is the primary language, but a Southeast Asian language is still a plus. Mistake number 3 is showing up for the interview without a clear reason for why you want to work in Asia. Banks in Asia are fully aware that a lot of international candidates would secretly rather be in New York or San Francisco, and that Asia is sometimes the backup. As a result, bankers test candidates on how authentic their answer is. If you can't convincingly explain why you want to specifically be in Asia, you're cooked. You're going to need to demonstrate a genuine interest by knowing what's happening in the Asian markets, having a genuine outlook on things like the industries you're bullish or bearish on, and etc. So those were the mistakes, and if you've made it this far, you can probably tell that Asia banking isn't for everyone. Everything we covered is really one big trade-off. You take on the most brutal hours in the world, a steep hierarchy, a language bar most people can't clear, and a culture that'll test how badly you actually want to be there. But in return, you get paid like a New York banker with a fraction of the tax. You get real client exposure years before your fellow analyst peers back in the US, and you get to operate in one of the fastest growing financial regions on the planet. You're going to have to make that decision as to whether or not that trade-off is worth it for you. That pretty much covers Asia banking. And if by chance you're watching this video, you're currently working in Asia, and maybe you're thinking about getting an MBA in order to work in US banking, then check out the next video on the screen. That said, thank you all so much for watching as always, and hope to catch you in the next video.